What's up everyone? It's Guys here. So I lost $1,000 in stocks. And I wanted to share this with you so that you don't make the same mistake. Because I know we're all friends here. That's why I created this channel, and that's why I'm sharing my mistakes with you so that you don't have to go through the same thing. So if you appreciate it, please make sure to subscribe. And as a thank you for doing that, here's a picture of a baby possum. Look how cute that is. Okay, so just recently I made a post about buying 100 shares of a company, and it was a company that I thought was extremely undervalued and trading at a massive discount. So I bought 100 shares and then I forgot about it. But then a few weeks later, I check on it and I noticed that the stock had gone down significantly. Now, usually when this happens, I remind myself that investing is a long-term strategy, and it's not about getting rich quick. You have to hold on to your investments for years in order to see a positive return. And generally speaking, if a company is fundamentally strong, then the stock price will eventually bounce back. So there's no need to panic sell. But in this particular case, even though I knew all of that, I still ended up making one very crucial mistake. So listen closely, because this is something that could save you a lot of money. Here's what happened. When I initially bought the stock, I purchased it under my cash account. Now this isn't necessarily a bad thing. In fact, it's actually a really great way to invest if you're just starting out. The way that it works is that you buy and sell stocks with the money in your bank account, and any profits or losses are realized immediately. For example, if I bought 100 shares of a stock at $10 per share, and then the price went up to $20 per share. However, in this situation, I had made the mistake of not transferring my shares into my other investment accounts like my Roth IRA or my taxable brokerage account. As a result, when the stock began to decline in value, I panicked and I sold all 100 shares for a loss. And although I did immediately transfer the shares that I had sold into my Roth IRA, I still had to pay taxes on the loss because it did not offset any profits that I had made within the same tax year. So in hindsight, the best thing to do would have been to simply leave the stock in my Roth IRA or my taxable brokerage account and then wait for it to bounce back. Now fortunately, the stock has already begun to recover and is now only down 10%. So I'm hopeful that it'll continue to increase in value over the next few months. But that is neither here nor there, because the point of this video is to show you what I did wrong and what you should do instead. First of all, you never want to let your emotions get the best of you. If you begin to panic and you start to think that you've lost all of your money, then you're more likely to make rash decisions that you'll end up regretting. Secondly, you always want to make sure that you have a solid investment strategy in place before you start buying any stocks. That way you won't be caught off guard if the stock market takes an unexpected turn. Finally, you want to make sure that you diversify your investments across different asset classes and industries so that you're really not heavily invested in any one particular company or sector. That way, if one stock goes down in value, it won't have a significant impact on your overall portfolio. All in all, I learned my lesson the hard way, but hopefully you can avoid making the same mistake. Thank you so much for watching, and until next time.